today on the Tearsheet Podcast.
So today, Tier 2 bank, Tier 2, it's small regional, credit union, community banks. The issue today, it's not they don't have the trust of a client. They have a trust. It's not that they don't have an increase of a deposit. With a COVID, they have the increase of a deposit. The issue with them, it's the long-term opportunity relationship with their client. And the issue today, it's like if you take a look at the opening account of checking account, not online, but just checking account opening, they're losing ground totally. And the two winners are on one side, Challenger Bank and the mega banks.
Welcome to the Tearsheet Podcast. I'm Tearsheet's editor-in-chief, Zack Miller. With all the talk about challenger banks and mega banks, Tier 2 financial institutions like community banks and credit unions frequently get lost in the conversation. My guest today on the show is Arcady Lapiro. His experience building first-generation challenger banks has molded his worldview on the banking industry. Now he's back with Agora, a banking-as-a-service platform targeting Tier 2 banks and credit unions. Lapiro joins me on the podcast to discuss the opportunities and challenges for smaller banking institutions facing competition from both mega banks and new upstarts. We talk about Agora and why he built a platform starting with two embedded services, SMB banking and teen banking. Arcady Lapiro is my guest today on the Tearsheet Podcast.
Good morning, Zach. I'm Arcady Lapiro, CEO and founder of Agora. We are the newest bank-as-a-service provider in the US.
Great. This is definitely a space that we were going to get into. So let me first hear, Arcady, about your background and what led you to this space.
That's a great question. So this space, bank-as-a-service, is there's two ways of people making it. Either it's new geek or older banker. I'm a mix of the two of them. So I'm based in New York for a decade. Back in 2000, I was in the challenger bank world. I was part of the founding and management team of, at that time, a digital bank. Today, you would call Challenger Bank. And it was called Fortuneo.com, and it still exists today. And we grew it to over a $20 billion deposit bank, online bank, and the only one profitable in Europe. So I'm just reduplicating the business model that I did 2 decades ago.
Well, I mean, is it reduplicating or it's taking the platform model?
So what we did the B2C and the B2B. So today I'm not doing the B2C, I'm doing the B2B. What we did 2 decades ago, we grew it to over $40 billion deposit on the core conversion model. Today, I'm just taking the same business model that we did, but with the newest technology, a new approach, which is dedicated to a Tier 2 bank in the US.
Got it. And one thing I just want to go back to you, when you started to introduce your background, you said a digital bank, which is probably known as a challenger bank. Given the fact that you were early in that space, do you think those standalone digital banks are actually challenging the status quo?
Honestly, in the pitch that they push, yes. The reality down the road, nothing. If you take a look at Greenlight, Chime, and all of them, product-wise, it's great on the marketing, but time is on the side on traditional banks. They can catch up easily with the right tech. And
do you think they will, or you just think it's a matter of time for the incumbents to figure out how to do digital better?
It will take time. The big one will. The question is, do the medium and small one will? I'm not sure. And there was a great article this morning by Ron Shevlin about who are the winners and the losers of 2020. The winner, one of them is Chime. The big losers, credit union.
Interesting. So let's focus on Agora then. So you have all this experience in digital banking, and now you decide to move into sort of the platform model. Why target Tier 2 banks?
Because it's an address market. Just before that, the genesis of Agora. So we started in 2018. First of all, it was a joint venture with the largest European retailer, like the equivalent of Walmart. So they built for themselves a challenger bank in-house. So they put tens of $millions into that. So we started a joint venture, Agora, with them. And the idea was first to say, is there a market? Is it core conversion? Is it pure challenger bank? We find out with working with a consultant, a big one here in the US, that there was bank as a service for fintech on one side. On the other side, there was players trying to do core conversion for traditional banks. And we found a sweet spot, which is fintech as a service for tier 2 bank and below. There's almost no one really which is coming here. Everybody is trying to resell the old way or to do core conversion, when the need is today, it's fintech as a service, challenger bank technology for this kind of segment. That's why we're here.
So let me just make sure I understand. So Agora really could help create digital offerings, digital brands, theoretically. They sometimes call these like sort of sidecar brands, or for the tier 2 banks, so they can launch and have a competitive offering within the digital space.
So what is Agora? So Agora is a complete challenger bank tech platform. You could see it as a core banking provider for challenger bank. We don't want to position as a core banking, but as a middleware. So theoretically speaking, what a tier 2 bank and below bank credit union can do with us? One, they need a single feature. They need onboarding. They need card control. They need shared account. They need reporting, whatever. It's through our API, we can bundle and plug a single feature. Option 2, they want to build a complete new digital bank. So it's a new move. Nimbus and Move and with Q2 are trying to step in. If you take a look at the final product they're launching, it's very similar to not a challenger bank, but a digital bank. And you can go to our website to see the products that we're launching, which are more challenger bank kind of a platform. So that's option 2. Option 3, because I'm from this industry, I built myself at very large scale banks, digital banks, and I was an advisor to very large banks. We are launching fully white label challenger bank, and we're launching with 2. So basically, it's a very wide approach that we can offer to tier 2 bank and below.
And given your conversations with tier 2 banks, like, so what are their challenges and opportunities in a market like this? You mentioned the Ron Shevlin's article about Chime being a winner and credit unions being a loser. Like, what about tier 2 banks? So
today, tier 2 bank, so tier 2, it's small regional, credit union, community banks. The issue today, it's like, it's not, they don't have the trust of a client. They have a trust. It's not that they don't have an increase of a deposit. With a COVID, they have the increase of a deposit. The issue with them, it's the long-term opportunity relationship with their client. And the issue today, it's like, if you take a look at the opening account of checking account, not online, but just checking account opening, they're losing ground totally. And the 2 winners are on one side, challenger bank and the mega banks. So today the issue with regarding versus Chime or versus really specific players, it's like, what's the business in 10 years? Who are their clients in 10 years? And if you take a look, it's like, you know, the name, you know, Greenlight, Step, all these challenger bank, which are focusing on the teenagers on one side. On the other side, the real, as of today, profitable market, it's small, medium business. You have Zen Business, Cabbage, Intuit, Radius Bank. They just announced like 2 weeks ago, they're launching an SMB digital bank. So these are the 2 hot segments for the credit union and community bank. The new niche, the underbank for Latinos, Black, it's not the reality. It's not the real market for them. The real market, it's like more mass market. It's the young population, Gen Z, and the small medium business. It's where you have which is a huge market. It's $370 billion market. And if they're losing these 2 segments, what's the future tomorrow?
That makes a lot of sense. So let's start with, you know, looking at what you're launching with Agora, like what product sets and what you're targeting. Well, let's start with the pure white label. What are the 2 white label solutions that you have there that you mentioned? Yeah.
So before talking about Agora, I'm talking about the market. So when someone is saying white label, what does it mean? White label, it's 2 parts. Either it's a pure regulated part, that means providing a bank charter, or option 2, it's like having a platform which is embedded for a third party, fintech or bank, and which is used by them. That is the concept of white labeling. We are going much further than that. when we say white labeling, it can be what I just told you, or which is basically to build a new brand for a bank, or we're coming with a new option, which is we're providing everything, even a full set of features. So I'm going to give you an example. Today, I'm a new bank and I want to launch a new bank, a new brand. I will call a provider. The provider will do maybe an app, and then they will do the basic features, which is deposit, bill payment, card issuance, period. And they will call it a new digital brand. So this is white label. So I'm going to explain what do we call white label. So we're launching two digital suite, the teenagers on one side and the small medium business. And I'm going just to focus on the teen. Chase just launched a teen product powered by Greenlight.
Right? Yeah.
Yep. If you take a look at the features, there's an app for a parent, an app for the teen, plastic card issued. There's no, I'm talking about Chase. There's no Apple Pay or Google Pay. There's no Apple Pay, Google Pay. And basically, that's it. Mm-hmm. That's the product. So the product that we're launching, fully white label for banks and credit union, and we're coming with a BIN sponsor, and we're doing also the card issuance. Basically, we're in-housing everything. It includes everything that I told you, plus virtual card. And virtual card is not Apple Pay or Google Pay. Virtual card is a separate card. It includes money pool, kind of what PayPal has, but much more advanced. It's a collect fund features. We included also a reward marketplace with the equivalent of cashback. We include a web portal, transactional web for the parents and the teenagers. Sorry, just for the parents. We're including co-control by both parents and much more. So you see, it's not just a single white label feature, which is, okay, it's very similar, but much more advanced. So this is what I call white labeling, but second generation. That means we are in-housing, like a lab, the research of additional products. And the same thing on the SMB. And SMB, we're not just coming with basic features. We're coming with expense management, with an OCR in real time, retirement plan, mobile point of sales, like an equivalent of Square, etc., etc. So once again, very advanced.
Yeah, that sounds really advanced. So I want to drill down on the teen banking. You mentioned that seems to be kind of really popular now. We've written a little bit near the end of this year as that was sort of ramping. The green lights, the steps, the Go Henrys would just raise some more money. Why all of a sudden is there such an interest around teen banking?
So teen banking was always of interest. Digital teen banking is the new interest, because before every bank, they had the piggy bank account, with a saving, a $50 a bonus, and really a checkbook and the small piggy bank as a gift. So when I was a child, a long time ago, they were giving like a puzzle or things like that. So it was always of interest. Exactly. We're that kind of generation. Exactly. And the thing, it's like digital teen banking. It's not just teen banking. It's every underbanked, every new angle where you can think that in 10 years you will be able to cross-sell products is the new hype vibe. So digital, it started 2-3 years ago with Greenlight in the US. Now you have Step, as you mentioned, and there's different kind of approach. There's the gaming approach. There's the social network approach, which is more Step. There's more the club part, which is kind of Get Cooper, but they want to take the approach of a kind of, I think, a club. I think so. So why is it today a vibe? Because the technology allows it, and because there's this social network things. The reality, I'm not sure. I'm not sure on the long term it's a real play. You're a parent, right? You have children.
Yeah.
Okay, I'm going to ask you a question. Your child is coming to you and saying, Dad, I want a bank, assume they're young. I want a bank account. And they will tell you, Dad, I want a bank account. And there's a new fintech. Oh, there's Will Smith. There's Bodirect, there's, all these Damino, all these new things. It's amazing. And on the other side, your bank will call you by saying, we have a in-house, a digital bank approach, much more features than the other one that your child is talking to. And by the way, everything is in real time. It's peer-to-peer. There's reward. There's saving account. There's everything. As a parent, what are you going to choose?
Yeah, probably likely the incumbent offering.
And why? Because you don't want your child to be like a Fortnite or Xbox thing. You prefer like and by the way, it won't be cheaper and there won't be additional features and you have less control. Mm-hmm. So that's why I think if incumbents have a real offer to be able to compete with Step and all of them, they have a play because they hold the relationship with the parent and the money is coming from the parent, not from the child.
That does make sense to me. So let's talk about SMB and why you focus on that. Obviously, it's a huge opportunity. No one's really seemed to figure it out yet, though. To me, it seems the most powerful offerings are the embedded finance offerings of companies like the Intuits that are coming, with large user bases in sort of an ancillary market. What does it take for a tier 2 to really service local banks, local customers? Sorry.
Yeah. Local customers and local business customers.
Yes, exactly.
It's an amazing question. When you say before the first question, there's a new trend for teen banking. I just want to make clear, there's no money to make on teen banking. Teen banking is the future clients in 10 years. That's where you can have a play to survive in 10 years. So as of today, there's no money. That's the real money today for credit union, community banks, regional. The real money, it's on small, medium business. And if they have it, on FX. All the rest, it's potential money in 10 years, potential, but you need the potential. So the SMB, and that's why we're launching.
Yeah, thanks for clarifying that about the teen banking. I know that's an issue, how to monetize young people, which is extremely, extremely hard.
But there's no money. It's like the only way to make money, it's to spend money on VCs. So VC money is pouring. I'm going to give you an example. I saw a slide on teen banking with an analysis on the different segment. And the different segment that I found out is they were mentioning Step with the key product, potential future key product was lending. How can you make lending on teenagers? How can you make lending on teenagers? It's not possible. So there's no monetization as of today. In our model, yes, we can make monetization because the way we construct and the additional features. SMB. So now you're a bank, credit union, community bank. You want to launch a small, medium business. What are you going to banking? What are you going to do? A website, an app, bill payment, checking, saving, CDs, and that's it. Then you have to call either your core banking provider or you have to call X FinTech to try to build an offering, to build. So now I'm going to take an example, which is a great example, Regis Bank. So Regis Bank, they announced 2 weeks ago, they're launching a new SMB suite, which is in collaboration with Naomi. So what it is, it's an app, it's a website, accounting service, digital opening. That's what I understood, which is a great offering for SMB. On the other side, you have Cabbage, Intuit, and you have Revolut that is launching also this kind of product. So what is the common product? The common product today for SMB, if you are a community bank and a credit union, it's a website. And that's it. And once again, there was a great report with a Cornerstone advisor last summer saying that half of a small, medium business, half of a, let's call it population, is thinking about changing the bank provider in the next 12 months. It's a report with Autobooks, and they're interested to pay for services, which is a great thing. That means customers are looking to pay. So we're launching a small, medium business, which with an app, onboarding, and additional features that will allow banks to not only compete with this new challenger bank, but to be ahead of them with even products they don't have, and they won't be able to have it. To have them.
Like what?
Mobile point of sales, sub accounts, CDs, retirement plan, etc., lending, etc. And when I'm saying they can have certain of a product, but most of these players, they're fintech, they're not bank, and they're working with bank as a BIN sponsor, but they're fintech. In our construct, our BIN sponsor is a bank. We are a platform, and our, let's call B2B client is a bank itself, a credit union. So you understand that from the beginning, from the construct, we're at every level, we're chartered. We are bank license. And Agora is coming with all the, like a puzzle, like a Lego box, all the components. So we can plug it the way they want it, and we can go fast.
I get it. So going back to that question I asked you before, Arcady, when you see these horizontal moves of companies like Intuit or Cabbage into banking, I guess how do the tier 2 banks compete against integrated solutions like that?
So to be able to compete, step one, they need to have a day one an offering that can compete effectively. So let's come in on the side of Intuit Cabbage. Intuit Cabbage saying, we have a customer base on our own services. Dear clients, we are banking service, and it's easy because we're already integrated. So we make your life easy. So that's their play. So you already are a client. You're already using our services. So it allows you to, we're expanding into banking, so it's integrated. That's for existing clients. The future client, they will say, hey, we are launching banking product, and you can also use our existing product. So it's a reverse approach. So now let's go to the credit union community bank. They have existing client, or they will have new one. They can say, you're already using our banking services as an end user on the retail side. And now we have a corporate product, which is even better than the other one because we have the same features, even more, and we can do lending, and we are local, and you can talk physically. When COVID will stop, even you can talk to us physically. So basically, they can say we have the best of both worlds, digital and physical. I'm not going to focus on physical, but just still like, you know us, you know where you can find us, you know how you can talk to us.
Can always pick up the phone.
Sorry?
And they can always pick up the phone to speak to a banker. Exactly. That's an important thing for SMB.
You know us. Yeah. You know us. You know us. You know we're here. You know we're here. I'm not going to talk about SMB, but last month, N26 announced an amazing feature. I'm going to say it very ironically. They set up a new tier, a paid debit card, a new tier. And with this new tier, you can call someone. Before, everything was with a chat. Now, you pay and you see you laugh. Now you can talk to someone. That's very important. It's like you can talk to someone.
This is the challenger banks moving into traditional banking. They'll eventually all have some type of customer contact centers.
Exactly. And Revolut, you cannot talk to someone. Everything is with a chat, which is, I love Revolut. I'm a client of Revolut for 3 years, and they're amazing. I'm really supportive of Revolut versus Monzo and 26 and the other. But there's a chat. It's very complicated to talk to someone. And 3 weeks ago, they announced a website. That means it was not just app-based, it was a website. Banking. And which is exactly what we do at Agora. On the SMB, there's a transactional website, there's an app, but also there's a contact with a credit union community bank, a real contact. It's they're talking to them.
So in the last question, I'd like to talk and hear from you sort of what your plans are now. You have these two white labels, you have the integrations. Like, what does Agora look like in 2021? What are you working on? What are your biggest priorities?
One, we're launching live with our BIN sponsor, which is a Q1 2021. So our BIN sponsor is Sterling National Bank. It's a $30 billion regional bank, so none in New York. We're also going to integrate with a smaller bank below the urban rule. We're also going to go live with Finastra. So very important versus our competitors. Competitors, either they're looking to replace existing core or to provide certain features outside of a core. We're looking to partner with core. So the first one we're going to partner is Finastra. So Finastra is going to, and we're already on their website, Fusion Fabric. So they're going to resell our white label solution to the bank's credit union. We're right now talking to another big core, which is interested by the same thing. So it's going live. That's one. Two, it's launching with the first clients. There's 2-3 pending final discussion and before launch. We're also going to launch a third white label product, which is today, so it's teen SMB. We are a strong believer that elderly people, aged people is a key segment. So we're going to launch, I'm already announcing it, a white label for aged people that needs to be protected, not just the aged people like a basic service. It's people that needs to be protected. Alzheimer, curated people, custodian, everything. And I think it's going to be a huge segment in the US. And as a funny joke, 2 decades ago when we launched the online bank in Europe, I did that already. We had an offering for teenagers, we had an offering for small, medium business, and for aged people. And I did that because our main shareholder at that time was Aviva, the UK insurance company. So it was our main investor. And so I built white label solution for them. So today I'm just doing it with a new technology, with additional products, but I'm just, I did it already 2 decades ago at a very large scale.
What's old is new again. Arcady, always great to talk to you. Thanks for joining us on the Tearsheet Podcast today.
Thank you.